Welcome back to another video, guys. Today I want to go over CAD yen and Swiss yen because I see two potentially good setups, and I want to break what I see down on those setups and just take you guys through, just how I like to break down my currency pairs and how I like to position my trades now. So, looking at Swiss yen here on the monthly time frame, I just want to show you guys how for the past year now, price has been in this beautiful uptrend. And about October, we started to see price decline. And now what we're starting to see is price push up yet again. And this is where I want to draw my attention to see if I believe that price could potentially continue to go up. So here's what I'm seeing. I see that last year we had an inside bar, a monthly inside bar, which is right here. And this is what price is actually testing right now. So inside bars represent momentum. Basically, you could see that for the month of July, price dropped, it declined, but then in August, price ended up going back up. And we made a new, or Swiss yen made a new high around 151.5s. And now we have this pullback, and price did not go past the lowest wick of that bullish candlestick on in August. So we can break this down a lot more. So if I break this down a lot more, you can see that this is actually a higher high, higher low, higher high situation, which represents an uptrend. And price did pull back towards 137.137, but it could not pass that price. So this is what I'm thinking. If price stays above 137, then we could potentially see price continue back up into 150 151s, right? Point 0.5. So this is where my eyes are located for this currency pair. So now this is where my analysis begins. I'm going to go over here to the daily time frame to break this down a little bit more. So previously in December and January, price was retracing lower lows, lower highs, lower lows, lower highs, lower low. And recently this week, yesterday, today, price has pushed past this lower high here, making this area a higher high. So this confirms, okay, could this be where the bulls or the people who are buying are coming back into the market? Because if so, I want to be the buyer. So I have two different areas in which I can take a trade. And I need to choose one because I don't want to choose both. If I choose both, I have to put both in two separate accounts. But I want to see if price can give me a deeper pullback to my daily estimation zone. And I have what I'm looking for here. This first trade will be a 5.94 RR. The position size that I would enter into my account is 0.25%. The reward is going to be 1.485 percentage gain. And then my market condition is that this is a daily reversal because we're going from a downtrend to an uptrend. This has a tighter stop than what my higher time frame entry would be. And my conviction level on this trade is higher, all because I like and prefer the risk to reward on the first setup. Now, this trade is based on a monthly time frame. If I believe that price can pull back, it maybe not make as deep of a retracement, but pull back into this monthly candlestick here. That is where this entry comes from. And so, if this is the case, then this risk to reward here is 2.18. The position size is going to be the same, but the reward is going to be different. I'm going to make 0.54%, which is way less than the reward potential on this trade. The longer potential that I see on here is that if price pulls back deeper, I may be in drawdown more and longer on this trade. And my conviction level, because of my reward that's coming back to me, is way less, and there is potential for a deeper drawdown. If price does pull back a little bit deeper, then my conviction level on this trade is medium. So I would prefer to take my first position trade over the second position trade. Now, the way that I will manage these trades just depends on how price pulls back and which one that I will be triggered into. So if I'm triggered into this first trade, then this is a potential of 1,205 pips, or a 12%, or I say a 12 yen target, $12 yen target. And so my break even point will come around 6.02425 here. All right, somewhere within this area. This is a potential of 972 pips, which is, and it's actually a little bit lower. There we go. I have changed these, but I probably keep them the same just from where I changed them. So around a $9.6 yen increase here. And so all of this just determines the way I'm going to place my break even. It's just a half mark of how price moves if I'm triggered into the trade. But all in all, this is Swiss yen. I'm looking for long-term trades going back up to the highs. So when we also take a look at now CAD yen, I also like CAD yen as well. So let's break this one down here too. You guys can see that for the previous 2 years, actually, price has been in a deep incline. And now, ever since December of last year, we've started to get this deep pullback here. So I'm looking at this and I'm like, okay, well, let me break this down a little bit more. So when I drop down to the weekly time frame, you guys can see that we're getting since last year, we're getting our first reversal here. Actually, there was a false reversal here. Higher high, higher low, higher high. Looked like price reversed, but then said sight, came back up and had a higher high. And now we have a deep, deep, deep reversal here. So now, to me, per the weekly time frame, this pullback is a counter. So this puts my conviction level a little bit lower, because if I enter this trade, it is a counter trend trade. Counter trend trades are a little bit more riskier because they may not give deeper pullbacks. And so that means that you may not be targeted or entered into your trend continuation trades, and that's all that means. But if I wanted to trade this, let's say I wanted to trade this back up to below this monthly candlestick here, this hammer, inverted hammer, then that's where this analysis is going to come to play with my targets. So breaking this down even further, we had a lower high, lower low, lower high. My last two trades were here for a sale and then here for a sale, but I ended up getting stopped out around these areas here for my sale. Didn't put my stop loss in right. I use MetaTrader 4 and 5 when I enter my trades. I don't prefer MT4, MT5 because sometimes things can go wrong on those. I like to trade through TradingView, but yeah, with these prop firms, you just got to use MT4s and MT5s. But this was a really good winner. This was a 0.25% loser, so it was okay. So now where we're here I see that price last week made a higher high, higher low. I was not looking at this last week, but now it's like, okay, can I get in on this trade here? So you guys can see my entry, and my entry is based off of this candlestick here. So with that being said, as I am looking to see where I want to enter at, it's also based on this higher low area here where I want to enter my trade. So I have my stops placed, I have my take profit placed, and these are my own, but this is also what I see. So the trade here, based on how I have it, will be a 4.66 risk to reward trade. My position size is going to be 0.25. My reward gain will be a 1.65% trade. The market condition that I am looking at is this is a bull volatile market. I have to change this to BV, but it's a bull volatile, which means these are narrow areas. You guys can see that they're not deep pullbacks, but we have a lot of volatility in these areas, which I actually do like the volatility here. And so if price can give me a nice pullback, I have a tight stop loss, which is pretty decent. I'm only going to be risking 0.25% because this is technically a counter trend trade. I don't want to give a full position size to this. And then coming out with a 1.165 reward is actually a pretty decent size for the account that I'm trading. So I'm excited to see how this plays out. I already have this set as a pending order on my MetaTrader, and we will see how this trade goes. So that's two trades that I see. Now, keep in mind, you guys, this doesn't mean that these trades are going to play out. I am well aware that in trading, we don't win all of our trades. I don't win all of my trades, right? But that is why I'm keeping my position sizes low. So then when I do get my big winners and my big winners do, come into play for me, then they do make up for my smaller losers. And that is something that I am working on a lot more, is focusing on my position size and my rewards, because your risk to reward and your reward gain is not, they're not always equal based on your position sizing. And that's basically how much you risk in your trade. So make sure you guys are doing strenuous math. It can get a little bit tedious, but please make sure you always know where your stop loss goes, your take profit goes, what your risk reward is, what your position side is, and what the true gains and losses are. Okay. So I pray you guys enjoyed this video, and I will talk to you guys in the next one. You guys be blessed and have safe, happy trading.